Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, June 27th. Mike Boutros with you on the horn. Aurelian, Mark, Peter, Pete, Ty, great to see you guys in the room today. Pete will definitely take a look. It says, can you please take a look at the SPX? Great call last webinar. Thank you. Hey, you got it, Peter. Yeah, it was a really nice drop, right? That support zone still holds, though. We'll take a look at it in a moment. Hey, Ethan, great to see you in the room. So, on the menu for today, by the way, I will be out for the next 2 weeks for my wedding and honeymoon. I'm going to try to get out updates next week, throughout the week, if I can. Webinars, though, will probably be on hold, guys. I'll keep you updated. Always remember that right on the homepage, guys, we always have this updated with the latest schedule. So keep your eye on that weekly schedule for the webinars. Worst comes to worst, they will be back on June 9th, okay? If everything goes as planned. Or excuse me, June 16th, if everything goes as planned. Thank you, Pete. I appreciate that. Other than that, guys, it is the last day of the quarter, last day of the month, last day of the week, heading into tomorrow. So you want to lighten up any position that you have. You want to be really nimble. You know, these types of market conditions on the quarterly ends and the monthly ends into the opening tend to be not the best intraday trading type of environment. So just keep that in mind. Stay nimble. And tread lightly as we head into the last day of the quarter. But here's where we are. The levels are phenomenal. So the dollar crosses have kind of have lost rather some momentum over the last couple, well, basically this week, right? But we're still trading at pretty critical levels. So on the menu for today, we're going to hit DXY, Euro Kiwi, Dollar CAD, Dollar Yen, Sterling Crude, SPX, Kiwi, Aussie CAD, Gold, dollar Swiss, and Aussie. There's a big full schedules for today. So we're going to jump through those real quick. As always, guys, feel free to throw out any questions or trade setup. So here's where the DXY looked like as we were opening the week. Big support region that we were looking for at the lower parallel. You had the 2019 open, which is basically where we closed last week, just below, like 3 pips below, 4 pips below. 2614, excuse me, was the 2019 open. Note on the weekly chart here, what we've been looking at, right? The break of that parallel or that basic slope from the October lows of last year, September lows, 4-point touch. That was the break last week on an outside weekly reversal, grounded out right here. Basic slope support off last year's low. 2019 open. We need to see a weekly close, guys. Here's what it looks like. We're right there. Okay, so what does this mean heading into the end of the quarter, heading into the end of the month, heading into the end of the week? Well, it means that if we don't start to get some traction below 96.14, the risk is for a bit of recovery before we break down. Not the ideal scenario, but that's the risk if we don't close sub 96.14. So watch this. You know, as it stands right now, we're actually trading higher on the week by just a smidgen. As I noted last night in the euro, on the inverse of this, right, the euro is basically holding a very clean weekly opening range. So we're looking for that break. But refer back to this chart into tomorrow's close for sure to give us some guidance on how we should look to start off July trade. Here's what it looks like on the intraday or the daily chart first. There's the yearly open. We closed below it one day here on the 24th. Ever since then, we've pulled right back above and we're sitting just above yearly open support. Again, not only is that long-term slope that we were looking at on the weekly chart, but even on the intraday chart, within the confines of the pitchfork, the same slope, 1 touch, 2 touch, is right there. So on a closed basis, although we closed one day below, here we are right back above. Watch 96.14. Here's what it looks like on the intraday. Near-term slope on this is phenomenal. Okay, this pitchfork we've been following off the highs has been really nice. Turned just ahead of upper parallel, turned right at the lower parallel, and here we are. The 618 retracement comes in at 96.30. Okay, and basically we've just been straddling the weekly opening range, and the weekly open essentially comes in straddling this 2019 yearly open at 96.14. You know, pistol to my head, again, I would still say look for a last blow off, an exhaustion rally to fade. the end of the day, if we get below the weekly opening range lows, 95.74 is just a soft target. It's really the low day close at 95.55 I'm looking for. That's kind of the big one right here. It's from the January low day close. It's your next big downside target. 95.74, watch it. It's a 786 retracement. It is the swing low from back in March. But both of these are sort of levels of interest, both for targets if we break and for areas of exhaustion where this thing could find a little bit more of a rebound. All things held constant, watch out while within the weekly opening range as we straddle the yearly open here. All told, guys, all the volatility that we saw so far this year, and DXY is still basically unchanged for 2019. So pretty meaningful stuff here. So watch this region. Again, my sort of ideal scenario is to get a blow off to fade. Here's the argument against that, okay? Just to show you how I sort of think of this. So if you look at the momentum signature since the start of the week, it's essentially held 60 as resistance on this rally here from oversold condition. Okay, that suggests that the momentum is still on the side of the bears at this point. So just use some caution. It's a breakdown any way you slice it. The broader trade is bearish. The question is, does the recovery get us a better entry closer to 96.56, the median line? This region, by the way, bearish invalidation for the broader trade is 96.75. That would be an area I'd be looking again to fade. At the end of the day, we're looking for a weekly opening range break lower. All right, so that's DXY, number one. Here's what it means for Euro. So obviously, again, from the top-down approach, here's Euro on the weekly. We talked about this turn, major support area. We're stuck at the 618 retracement of the yearly range. It's 113.93. We popped just above it. The high executed, I think, at 114.07 or something. But here we are. Resistance is resistance. Now, for the Euro, just higher is its yearly opening range at 14.45. That's sort of the bigger level I'm looking for. Also, the swing highs from March. So a little bit of a different picture for the Euro, but nonetheless, trading at near-term resistance heading into the close of the week, heading into the close of the month. Weekly chart, watch 1393, 1445. This 50 pip range is crucial. Euro on the daily chart looks like this. Now, not only did we have that Fibonacci 618 there, but we also had slope resistance. Here's a basic pitchfork off the yearly lows. Upper parallel caught resistance, upper parallel caught resistance. Now with the Euro, again, we made an outside daily reversal off the upper parallel from 4-month highs. Typically that's near-term bearish. You got the pullback. We've been holding the June opening range highs as support. Again, very tidy, clean weekly opening range in play. Here's what it looks like on the intraday. And here's what it looked like last night. So clean opening range low 1347, opening range high 1411 was the high that we executed. And we're just straddling the weekly open, which is again 1370. So, my inclination has been to sell rallies near term, just for near-term scalps within the weekly opening range. I do that on account of I'd rather be short up here for a little bit deeper of a pullback. Again, ultimately, we're working under the assumption that this is a pretty decent breakout. You had basic trend resistance broken. You had the opening range broken. Should be looking for a late month low. That could have been it. I don't know. But all things held constant, we're looking to buy a bigger pullback. The immediate risk, though, is you're still setting up a weekly opening range just below slope resistance, just below Fibonacci long-term yearly range. 618 is 1394. So take it for what it's worth, guys. We're pretty stretched. I think again the larger picture is on the long side, but man, it's hard to justify getting long into these levels. And 1394, 1393 is not too far away. Again, the 50%, the yearly open objective resistance 1445, that's not too far away. So look for a break of the weekly opening range. It's really clean for guidance here. Again, best case scenario, you need to see a correction. So you need to make one more low beyond the weekly opening range low before maybe another resumption higher. So that's euro heading into the close of the month. Okay, what we don't want to see is weakness beyond 113 into the close of June. That wouldn't be good for the broader reversal trend break here in euro. Any questions on this? So another euro cross that we've been following this week that worked out really well for the short side of the euro as opposed to the dollar here was euro kiwi. Now, look, I was looking for support down here. Where's euro kiwi? There it is. But we didn't get it. Okay, it's still pressing lower. So there's really nothing to do here unless you're on the long side. Recall again, for euro kiwi, we've been following this one for a while. The basic premise of this trade into the open of the week was to look, or I guess we can, go back as far as the previous update. This was the open of the week. We were looking for resistance up here. You had the high close for the year, 72.74. You had the upper median line parallel. The lower parallel caught really nice support. So we were looking for exhaustion. We needed a 73 break to mark resumption. Boy, that held like a charm. Took down all the downside targets. We were looking for a reaction here, and we got it. Okay. The following update after that decline, we said let's look for a rebound. Okay. Oops. Right here. Crashed through all of these levels. We were looking for some sort of low to execute at 70.80 or 70.68. These were also the downside targets for any shorts that you were in. But largely we were looking for a recovery off this level. Look what happened. Look what happened. You actually made a recovery within the confines of the parallel. Our bearish invalidation was 72. This thing got as high as 72.16 and then failed miserably. Broke right through support. This slope here has been taken out. Okay, I didn't have it in the update here, but we're pushing that now. The next downside target is right here. The 1618 extension, 69.62, 69.58. Okay, you also have that. I think it's the low day close for that session, but I'll review that. In any event, it's still muttering lower. Now, again, it's one of those trades where it's just like the euro, right? Because it's probing, it's got a weekly opening range really intact. This one, my problem is that you're coming into slope support and you're getting divergence on these lows. So I really can't get excited about trying to press fresh shorts down here. Hi, Mike, draw your pitchfork on the intraday a bit wider and add that 138.2 with Euro Kiwi. You're talking about this? Not bad. Not bad. The only thing is, I would say that the lower parallel here was a little bit cleaner on slope as far as the upper parallel and the median line break, but you could take that interpretation too. It would still keep you basically into the lower parallel here. Looks pretty clean. DJ, thanks for pointing that out. In any event, the break essentially has you looking for a test of the, guys, the monthly opening range here hasn't even broken out. Let me take a step back. Here's why this is so critical for me. Euro key on the weekly chart. Look at this. Look where we turned from. That's 70 to the 618 again of the entire decline from last year's high. The parallel here. This formation on the weekly chart that extends back to the highs in 2017 has been insane. You see that median line right there? So I'm still looking 69.50s before you start to run into weekly structural support. So it's pretty clear. Again, this is also available on last night's update. Here's what it looked like last night. Okay, the parallel right there. The daily chart, look at this. Here's that red parallel that you were looking at in the intraday. Okay, This is just a parallel of the same slope for that pitchfork, extended off the low from April. Pretty nice touch right there. We're testing it right now, right? If we close below it, momentum is dragging below 50 for the first time essentially since earlier this year in June when we marked that low. The 1618 comes in at 65 or 69.58. That's sort of the next big downside target here. Okay, we've already blown through the yearly open. We've already blown through 100% extension. So if it was corrective, it should have held somewhere around 70.40. We've already taken that out. 69.58 is still going to be your next major target. Okay, and here's the intraday again. So what we look like now. So bottom line, if you're holding shorts, this is where you want to start to clean some off that table. Bring your stops down to last night's overnight high or better. And the next, like I said, next downside targets. Watch this 169.60. I'd be looking to book most of it there. This is critical support. This is critical support. It's that 69, excuse me, 69.19 to 69.08. So that's your 1618 extension. This is a way longer dated. Forget that. You don't even need that anymore. We got the 38.2 of the entire advance and the 2019 18 yearly open, last year's open. The swing lows they made back in June, or earlier this month, rather. We're still in June. And then the pivot breaks they made here. Former swing high from April, former swing highs again in the May open, break, pivot, support. All of that converges on the lower parallel. So this is sort of your next big zone of support targets. 69.58, 69.60, and the 69 handle, essentially, just above it, is where all that slope converges. So pretty big move here for Euro Key. I had all the hallmarks of a reversal from that key 618. You had an outside daily reversal off that level. The secondary high you made again failed at the high close. Really telling stuff. Break below the monthly open was also the parallel. You saw that accelerate. Here we are. So if you get hesitation here, near-term resistance 70.67. Okay, 70.60 right here. Bearish invalidation. I think I said this last night. 71.09. This is what would shift our focus to invalidate the breakdown that we just saw. Other than that, you're looking to sell rallies in Euro Key, looking for those last downside targets. Any questions on this one? There's probably the better Euro play this week instead of the Euro dollar, because that thing's just stuck. So that's number 3. Number 4, dollar CAD. A trickster in disguise here as we head into the end of the week. And I noted this both on Daily FX and here on SB. Look, we have a lot. Let me take a step back. On the weekly chart, there's still more downside to go, right? If you're trading this on the longer term, if you're looking at this from the structural standpoint, the big zone beyond this, obviously you want to look at the yearly range lows, which come in like 30.70, but the bigger area is still 30.50, a basic 38.2 of the entire 2017 advance, and 2 equal legs off the high gets you 29.70. So it's like a 90 pip range, I understand, but we're in a pretty major breakdown here. After holding momentum 60 on the weekly chart, here's your drag, and we're heading towards 40. Big support zone for the weekly, a little bit lower. The daily and intraday, however, had us at an interesting juncture. And that's right here. The yearly low day close, we executed it in early February, right on the first day of trade. You found support there into the close of February trade. That's what we're testing right now. Beyond that, like I said, the 100% extension off this year's, or just this recent decline, not even taking into account the larger decline, just this recent decline, gives you 31.05. So I was warning you guys in the webinar earlier in the week that that's sort of a region we're looking for. We could see a little bit of a hesitation. It's the last day of the month tomorrow. It's the last day of the quarter. I'm really reluctant to do anything. Gunshot to my head, or a pistol to my head, I would say look for a little bit of a recovery here, and we'll ultimately want to sell that. But that's the risk. We're sitting at support. We're sitting at support. And if the break here was legit, remember, every time we see a break of a downslope, typically that's one of the accelerated parts of the move. And while it looked like it was starting, here's support holding. Literally the low we executed yesterday was right in this range at 31.07. So what do you do here with dollar CAD? Here's what it looks like. Dollar CAD, by the way, tomorrow you do have that dollar CAD data, the GDP numbers. Their monthly figure is not expected to be too far off. You're looking for a year-on-year print at 1.5% versus 1.4. So we'll keep an eye on that as you head into tomorrow. Maybe give us a little bit of volatile pump here in dollar CAD. But at the end of the day, if we break 31.05, you're looking for 30.50. That's like the first downside target. But I can't get excited about taking a short here. The start of the week, if you guys remember on Sunday's update, I was looking for a pop back into the upper parallel, or even 32.58 would have been the ideal scenario to press the short. Literally the high executed just ahead of that parallel. We never quite got into it. And here's the breakdown. So if you're holding shorts, again, maybe bring your stops up or bring your stops down to 31.50 or above. You need to see that bank break below 31. If you're looking for fresh opportunities here, even if you get a decent divergence for a long bounce or a bounce or recovery, just make sure you play it super nimble. Things are likely to thin out, guys, into tomorrow, into the close of the month and quarter. I don't want to get caught wrong-footed on these. So dollar CAD pressing support. 31 is the level to break. Structural support, slope support, Fibonacci support, the works. If we were going to get a bounce, I would have thought we would have gotten it by now. That's my problem with trying to even play a recovery. Be on the lookout here. You're likely to see some acceleration if it breaks 31. Any questions on Loonie, number 4? Yesterday I did talk about dollar CAD. Just a disclaimer, I am not in it, but it is something that I'm looking at with great interest here after the rebound that we made a couple of days ago. So look where that thing bottomed out. This doesn't happen in dollar CAD or in dollar yen very often. There's a reason it earns its title, the abomination. That's really clean off the lower parallel. We didn't know too much about this slope. You had a nice median line rejection there of the 75% line, 25% line held support, but then this happened, and it's been kind of a mess. So nice to see that reversal there. Yesterday we were trading just below the 2017 low day close at 107.83, and I was telling you guys to look after this reversal to look for reaction there. If we break the monthly open, the median line, I think this is where you want to start to look for near-term exhaustion, but the immediate threat could be for a push higher here. Here's what it looks like, or here's what it looked like yesterday. So dollar CAD, no change to any of those levels. We're just sitting in this support zone. And here's dollar yen. So we were holding 107.80 yesterday. We popped through. We maxed out a high right around 108.16. So just below monthly open resistance at 108.27. I don't know if we try to push that again. But that's where I'm looking for failure if the ultimate move is still to stay to the downside. The intraday chart is a mess. And from that standpoint, a weekly opening range break yesterday did shift the focus higher, but that channel that we were following from last month still is in play, guys. It's either going to be a breakout, we're going to get a larger recovery towards that 108.40 level, or it's going to fail basically against this high in US trade today, in which case, you'd look for the resumption down again. So not a trade I'm, necessarily going to be looking to even get involved into the close of the month, but certainly we're looking to see if we see failure ahead of this 108.40 level on the stretch. Dollar yen on the weekly, just to give you some picture, looks like this. I do not know what to do with that. Right, that dominant slope off the high from 2015. You could say it's still a pivot because on a closed basis last week, we literally closed right there. Here's what it looks like on a line chart, right? But even if it is a rebound or pivot, momentum finding support, you'd still need to clear back above 108.40 for you to suggest that this is a more significant low. So for me, I'm kind of looking for a break of this immediate range. The lows we just made this week and 108.40, 108.43 as resistance. Makes sense? All right, so that is dollar yen. Number 5. Number 6, sterling. So the previous update, we talked about this sterling setup. It's gotten boring, right? Because there's just no momentum. The ideal scenario play for us, if you guys remember, was I mean, obviously the swing trade got stopped out at break even, but I was looking for this drop near 126.45. Monthly open support comes in at 126.32. You had the lower parallel there, 25% line of that pitchfork earlier in the week. We didn't get the drop, right? It stopped. We're kind of stuck, still within the weekly opening range. Weekly open resistance comes in at 27.36. Again, yearly open, major level here. And the objective monthly opening range still held. So look, on account of the outside day reversal we made right here on the 25th, you know, what do I want to say? Nothing's changed. Just to put things bluntly, I'm still thinking you need that last corrective low to try to get the long position back on board, and then you look for a plow through yearly open resistance up towards 2840s and such. Yeah, I mean, I just don't have justification to try to press the long here. And this is another thing I was looking at. Maybe this slope, if you attach to these lows, maybe this is a new interior slope of the same gradient, right? But it's too tight. It's too coiled here. It's too coiled. And after this V recovery, you'd either need a break above 27.54, validate resumption, or you'd need that deeper pullback, maybe a test of monthly open support, a 50 of the recent range, slope support. Maybe if we don't even get that low, but something to suggest we're sort of done here with a correction off the high. Even from a wave count structure, 1, 2, 3, 4, 5, you'd want to sort of A, B, C before you recover. That's my idea heading into next month. We can't discount that reversal we just made. Questions on the British pound. Number 6. All right. Next up from that update was crude, number 7. And then we'll hit SPXP if you're still looking at that right now. I think it's on the move. So here's crude. And this is going to be a big trade, guys, as we get deeper specifically into this month with what's happening with all this geopolitical event risk. But big region for us in that crude update was, if you guys remember, we've been following this one for a while. Here's what it looked like last week. And even before that, on the 16th, just to walk you through this trade setup, we were talking about this pitchfork very early on the descending channel formation. We were holding resistance. We were looking for a breakout. The major first target was going to be the objective what? Monthly opening range highs. It came in at a 236 retracement. It gave you 54.34 into 54.60. A few 2 days later, it broke. Okay, after it broke that channel resistance, there was the region. We sat there for just a bit before plowing through. Next upside targets are 58.56, and that 60 handles huge. 2018 open and a 618 fib of the entire decline. Well, last night we took out that first target. Secondary target, like I said, 60.06 into 60.45. That's the big zone. We turned last night just ahead of this, just ahead of it. Here's what it looks like. Oops. Look at this. The high registered at 59.90. Okay, we were looking for 60.06 into 60.45. You still might get it, but I just think a lot of people were looking at the 60 handle, guys, and when there's a lot of interest, just from a sentiment standpoint and exhaustion on a specific big figure like that, a lot of times, guys will start fading out ahead of that level and never quite makes it in there. I don't know if it makes it or not. I'm going to count that on the account of the pullback here. I'm going to say that stretch was probably the closest we'll get on this immediate front. Note the divergence we've been seeing in momentum all the way into these highs here. It's just a risky area to try holding any long exposure, in my humble opinion. So we're done with the longs. The breakout was beautiful. We took out all 3 targets, saved this one by a couple of pips. Lighten the load here. Lighten the load here. On the weekly chart, remember where we're trading. Last year's open. Obviously a little bit of a mess there, but a pivot break and acceleration late 2018, a pivot break and acceleration in March. Again, an outside reversal candle breakdown lower in May. 618 retracement of the near-term decline, right? And on top of all of that, this formation that we were following for years. You guys remember this? 2015, 2016, we talked about it all. 2017, the break fueled the start of the rally that took us into the 2018 Ripper. Okay, that pitchfork, again, resistance, resistance, break, support, break, acceleration. We've been pivoting along it. That same slope converges right there. So yeah, I do think the recovery in crude now comes into a critical region, 60.06, 60.47. Watch for a reaction there. This is the 2-hour chart. Basic trendline resistance off the highs from April, May, also converge on that region. I mean, there's just a lot there. Tame any expectations you have on the long side. Pullback. Obviously we said yesterday 58, 56 is going to be your initial support. Now that is resistance. That's going to be your first level. If we break the median line, look for reaction at the weekly open. I do think that heading into the end of the month, if we break the median line, we're probably going to see a larger spill to the downside. But all things held constant, tame any expectations for the longs from here into the close of the month. Now, having said that, if it breaches, trading's an if-then proposition. The first upside target is 62.44, the first one. So there's a lot of room on this thing if we do breach. Immediate advance at risk below 60. Questions, comments, concerns on crude? What do you think about FX volatility? Has it picked up? How do you evaluate? Marco, I do. See, there's a lot of different gauges that you can look at, Marco. I try not to spend too much time on that, and I haven't looked at it, to be honest with you, as of late. I've got a lot of things on my plate these last couple of days. But listen, for the time of year, the volatility that we have seen definitely stands out. And while it's not going to be sort of an ongoing, all of a sudden we're going to just get, sustained volatility. The volatility figures that me and Jamie have been presenting to you guys over the last couple of months, the contraction that we've gotten to levels we haven't seen since 2014 in euro. That's when we saw major turns in price, major lows, major highs. All of these things are still valid, right? That contraction was super tight. So yeah, I do think that volatility is expanding. I don't know how long it'll be here. I'm hoping it'll be here for a while. But on top of that, Marco, you have all the geopolitical stuff going on. The president of China and Trump are meeting, and maybe we get a agreement, maybe we don't. We got the issues with Iran flaring up. So there's a lot of catalysts that could play into it. Trying to trade volatility itself is, for me, kind of like a moot point. But I'll tell you this, a lot of these setups are trading in beautiful zones. And the fact that we're heading to the end of the quarter and to the end of the month, with that sudden surge finally looking like it's on the onset, I do think there's going to be a lot of opportunities in the months to come, for sure. My humble opinion, Marco. But just from the contraction that we did see over the last couple of months prior to this breakout that we've been seeing in the dollar and the massacre, basically onset triggered by the Fed. And this all of a sudden shift from, we're getting 2 hikes this year to, we may see 2 cuts this year, right? He says, okay, thanks. Anytime, Marco. Anytime. All right, so SPX. Pete, here's what it looks like, man. So I did put out, and I don't do it too often, but I did put out A couple of SPX updates over the last couple of weeks. Here's what we were looking at when we saw that top side break above 29.14. Remember, the first target was 29.30. The last target was going to be the basic record high we set, which was 29.59. The insane thing about this setup is that this same slope, which we were talking about how we hate these really, really steep slopes, the break never really gave you a downside move, but it kept on working as resistance. And it kept on doing that right into the final target, the record highs, 59.59. We did spike just through, but then it failed. A day later, as we failed into that region, we talked about this slope. We put this together in the webinar on Tuesday, if you guys remember, or it might have been Monday. And we said, look, the basic support, key support is 29.29. Look for a drop towards there to complete a near-term correction. And if that breaks, this is your big zone of support, 29.09 into 29.14. Well, it broke just a day later. The drop was on set. Told you guys to stay short and look for a reaction as you get into that big two support levels at 29.30 and then 29.09, 29.14. Here's SPX now, right? Came right into it. We're sitting right there. My problem now, Pete, is I've been trying to look for some sort of slope, right? Because obviously we've invalidated the bottom end of that. The gradient still looks good. So if you take this and extend it off the low, it still looks like it could be in play, but I don't know. You're basically buttoned right back into support. This is the first area. Hold on one sec. Let me just see what this looks like. That'd be a better gradient. You have a one touch, two touch, three touch. Here you have a parallel extending off these two lows. Got one touch, three touches right here. It further puts the emphasis, Pete, on we need to break back above 29.30 to get this thing going. And you can see that we've been basically, so there's a couple of different ways you can trade moves like this. So you basically saw a pullback off of longer term resistance come right into initial support, and now you're seeing near term consolidation. This is going to get messy, but just to show you sometimes how I'll approach these. So you have a near term consolidation right here. A downside break while you're sitting at support would validate 29.09 break. And then you're just looking for slope as a soft target. The bigger level is going to be those swing lows, comes in at 38.2, the entire advance. It's like 28.75. It's a big call, right? That's someone calling for another 50 pip move down lower in the SPX. So we have to take the levels as they come. But as it stands right now, Pete, 29.09 is what you have to watch to support. And again, don't take my word for anything. It's also been an objective pivot in price. Objectively, here's resistance, here's the breach and acceleration, here's support, here's support. Watch for a break of this near-term consolidation. Does that make sense, Pete? Let me just see where some of these retracements come into play. I'll just leave that 50 on there. Decent pivot. Peter says, thanks, Mike. Wish you all the best for the next few weeks. Enjoy. Thank you so much, Peter. I'm humbled, man. Thank you so much. I appreciate that. So that's SPX. I think it's going to make some waves. The thing that we need to just keep in mind is if something comes out from this President's Eye meeting or whatever, and they get some sort of agreement with China, you might see a relief rally rip this higher. I would say that the one thing I'm looking at now is the new high day close, and I wanted to move this guys with you. So the HDC that you see right here is from 2018. The new HDC for this year moves to right here. That's 29.45. It's the level that you see right here. So for me, I'm going to move this just signal just so you guys understand. That's the level that would need to be breached to mark resumption. And then obviously, like I said, we have no targets above here because we're in record highs. We'd have to reassess. My base case scenario, again, is a little bit larger of a risk here for a deeper cut before this thing moves higher. All right. Next up on tap, we're making good time here, is 5 more to go. Kiwi, number 9. So, Kiwi just kept on ripping higher. Didn't really pause. Level we were talking about 66.40. We went into 66.40 and made short order of that one, and plowed through, heading towards this year's yearly open resistance at 67.05, 67.12. So you've got the 50% retracement of the yearly range. You've got the yearly objective open, former swing lows from that late swing in January, all converge right here. As it stands right now, I think someone here might have pointed this out on Tuesday, is this 100-day, moving average, which is now in view, basically capped the high exactly today. So I was going to put this in the update last night, but I didn't know how to relay what I wanted to do here. So at this point, we've adjusted some of these levels. This is from back on the 24th. At this point, you kind of want to wait for a tag of 67 if we can get it, in my opinion. Now we're getting some divergence all throughout the week, guys. We've been making higher highs, and lower highs in the oscillator. So the signal is there, the trigger is there, price is not there. I want to see reaction at 67 if we get the stretch, but that's sort of the idea here with this Kiwi rally. It was a breakout. We've been following it for a while. That breakout of that longer term pitchfork we were following from the highs of the month. Really nice move. We're looking for a pullback early in the week. Puja, we were talking about this in the webinar on Daily FX on Monday. I was looking for a long position on a pullback. We didn't really get it. Ever since the start of the week, it's just been a continuation. This was the only move that you got, on Tuesday that was going to be of any use to try to get back in this. And end the story. Long story short, look for that near-term pop into 67. Look for a reaction there. This is going to be the 8th consecutive daily rally in Kiwi if we get it. Last time we saw 8 days up. Man, we got to go back. Last time we saw 8 days up was right here. And right here. Let's take a closer look. All right, so in both these last instances, one of them saw a larger pullback of just a couple of days. The other one, we kept on going lateral to pushing and grinding higher for the next couple of days. So that in and of itself is not too suggestive to look for the exhaustion, guys. But it is an extreme. It is an extreme that we haven't seen in years, literally. So just keep that in mind. Definitely not the time to be pressing anything new on the long side of Kiwi. All things held constant, we're looking for some sort of kickback, some sort of reaction off 67.12, 67.05. If we close the week, by the way, if we close the week above that, you're probably going to see this thing rip. I don't think you do it, but that's the scenario if you do. For me, I'm on the lookout for near-term exhaustion up here. Questions on Kiwi? That is number 9. Number 10, interesting pair, Aussie CAD. I haven't gotten back to it since the initial update that we gave earlier in the week. And that's just because it's been really boring this week. The idea was to look for a rally towards 92.16, look for a reaction there. That's going to be the pivot zone. It should be the area which you look for exhaustion if this thing is moving lower. But the long and short of it is this thing made exactly 2 equal legs down. That's the low we closed for 2018. The level was 91.20. Super nice outside reversal candle right off that low. Had us looking higher. Now, this was supposed to be your first target, and it was supposed to be an area to look for exhaustion. You never quite got here. We're still higher on the week, but it's just a very pitiful weekly range. So for this one, guys, nothing's really invalidated per se. The levels are all the same, but look for a break of the weekly opening range. It's super, super clean. You have 2 tests of resistance. You got 2 tests of support. The break of that should give us a tell heading into the close of the month, heading into the start of July trade. All right, so nothing really per se to update on this, but levels unchanged from earlier in the week. Okay, last 3. Let's hit Swissy, Aussie, and then we'll hit gold real quick. Here's dollar Swiss. Similar scenario to euro, only dollar Swiss did something really weird last night. It broke through the weekly opening range, which was which was what kind of I was looking for as a tell. So let me take a step back real quick. Dollar Swiss, the whole premise of dollar Swiss on the larger scheme was that this thing was coming into bigger area of support, basically just at the objective yearly opening range lows. Okay, the big pivot was 98.40. We talked about that. This yearly open, 786 retracement. You had the median line there. Outside reversal on the weekly standpoint last week, closed below, right? Daily chart looked like this. A slope right off the highs, had the lower parallel right there. Right there. 50% retracement of the yearly of the advance off the low in February, right there. Right? The lows for the year, the yearly opening range low, right there. So you had all the hallmarks. You had a nice reversal candle right off it. This is your first area of resistance. This is where we want to see the advance hold if we're moving lower. Here's the intraday chart. So the opening range for the week heading into even yesterday looked like it was an opening range at support, just like euro dollar is an opening range at resistance. That's still holding. This was an opening range at support. So my whole point, guys, is why I got ticked off is because of what's happening right now. This break of the weekly opening range should have us looking for a Thursday, Friday high. Well, if this was it and we break lower again, we're probably going to see that 97 handle crack. The idea for me was to play the long towards here, take a little off, and then try to look for an extension here. And maybe this is where you look for exhaustion. The fact that we're making this turn here and we're starting to dip pretty low in momentum has me getting shaken out. I think that this thing is just not going to go on much of a drive higher from here. Even if you look at it from just like an extension standpoint, what's the measured move? Look where the 100 comes in. You know what I mean? So like, what the heck is that? Did that just pop through and fail? Is that the extent of the correction? I don't know. So curb your appetite for the rebound on dollar Swiss. I know, we were looking for that recovery, and this was the favored play to play the dollar recovery, just on account of where we were sitting at support. Here's dollar Swiss. All right, so we dipped down into this zone. Both of these were the levels that we were looking for. Exhaustion, it got obviously a little bit deeper here on this stretch, but man, it defended it right off again. And here we are, right back into the 618 and the median line. We're trading right here. So, if it breaks back 97.40, forget it. It's going to look for resumption. My ideal scenario is to look for a kickback here, but still look for that last drive into 98.38, 98.50. This is where I wanted to be a little bit more aggressive on trying to press a short. So fortunately, we didn't get a position off 98. If it continues lower, I'd be concerned. All things held constant, I still think it has some stretch. And the timing, guys. End of the quarter, end of the month. Just use caution. Don't chase any of these. All right, so that is number 11, and last but not least from the currency block, and then we'll hit gold, is Aussie. Another one that just didn't want to stop. Very similar to Kiwi, in that I think it's got a little bit more upside to go. Next upside targets, guys, 70.05 into 70.18. We talked about that region. Low day close for the year from that January flash crash. 1618 extension. Also caught the highs that we made back here. Nice zone of resistance. I don't want to be too stubborn and miss a turn here if it doesn't quite make it that high, but we're on the lookout for exhaustion. And again, same type of reference you've been looking at with Kiwi divergence into the highs, just not getting the reaction in price. So look for a stretch in 70.05, 70.17. Love to see some sort of kickback off that region. What is that? What is that, right? Not a good thing. It's not a break and this slope is completely junk. We shouldn't even look at it. Or this is going to false break and pull back again. Momentum still hasn't cracked really 60 on a daily close basis. Look at the cursor, guys, on the daily chart to the left. Ever since the high that we made earlier in the year here in January, we haven't broken 60 on momentum with multiple drives into oversold. So if it's gonna fail, this is where you would look for that to happen. Former swing lows, former swing highs, monthly range highs, low day close for the year, perfect pivot. It's kind of what I'm looking at here with Aussie. That is number 12. Okay, last but not least, guys, everyone's talking about gold on this breakout, and I warned you that we were looking very vulnerable at that 1433 level. That's the former swing high that we made. The late swing high wasn't the yearly swing high, but back here in late 2013. It was a beautiful soft target. Here's the weekly chart, by the way, for gold. Want something kind of blow your mind. That's what this looks like. So the breakout above 1380, that was the huge level that we were talking about for years, finally materialized. First target was 1433, second target is 1451. Here's the first target and the pullback. I think gold does a little bit more of this sideways down before it starts to make the next kind of move higher. Near-term support 1380 again. Okay, that's still going to be the larger support structure. You know, I started off, guys, of the week saying bullish inval 1327, but I kind of wouldn't even want to see that. Broader bullish inval for the upside break. I want to say 1366, 1350. But we'll have to see how next week starts. Look, it's still an overbought territory in the weekly chart. That doesn't mean anything on the pullback. Here's the daily. Here's the daily. That's just a parallel channel support. Accelerated break. Here's the pullback. I'd expect to see some more back and fill here before this makes the next move. Here's the intraday chart. Right? There's just not much structure to the decline. There's not much structure to this massive advance either. So this is your first area of support, and we talked about this. This is just kind of your weekly open. It's objective stuff, nothing fancy here. Here's your weekly open to a high. You pull back. This is your objective weekly open support and the weekly opening range low support. So at the end of the day, if it breaks sub 14, you look for a larger pullback in price. Slope comes in somewhere around 1380 if you're looking just at that. But I think this has a little bit more to go sideways to lower before you start to mount any type of resumption of the broader uptrend. Everything is so stretched. Everything is so stretched. So wouldn't begrudge traders wanting to reposition this heading into the close of the month and quarter. At the end of the day, you do want to buy a bigger pullback, but just not sure this is going to be the one yet. All right, that's everything on my list. Any other questions or trade setups you guys want to review? Feel free to throw it on the message board at any point. Oh, someone was asking about the, yeah. So here's the silver trade that I was talking to you guys about last week. That resistance held, 1448 held. Remember that 50% retracement? It was also more so than the 50% retracement. It ended up being the exact 100% extension. So two equal legs off the low gave us 1515 to 1548. We were talking about that on that whole stretch. On this once, twice, he had a nice divergent reference point into that level. On the pullback, when that held and we rebounded back, I thought it was going to give out. I thought it was going to give out, but it didn't. So look, the levels are unchanged, and the key support zone that we had talked about earlier last week, I suppose it was, is still going to be my near-term bullish inval. Even if it gets down to 1507, that would be a basic 38.2, nothing fancy. And just referencing this from I here, I'm assuming the 100 comes right in there. Pretty darn close. Okay, pretty darn close. 1506 into 1510. All of those converge on slope support, former consolidation resistance, one touch, two touch, there was the breach and breakout. All of that converges in this 10 pip, not even, 5 cent zone, 4 cent zone. All right, so keep an eye on that support zone for silver, but I do think that the risk is still going to be lower on the near term. All right. Mark says Mazel Tov and best wishes for the marriage and honeymoon. Markets will probably still be here when you return. Cheers, Mark. I appreciate that. I appreciate all your comments, guys. I'll keep you updated. I will be shooting out a couple of updates throughout the week tomorrow. So the wedding's actually at the end of next week. But I will be all over the place. So I'll try to get some updates out. I'll keep you updated. If I do squeeze a webinar out, guys, I'll put it on the day before on the homepage. If not, Jamie will be taking care of you guys just fine. And I will see you on the other side. As always, guys, best of luck trading to the close of the month. Just use some caution. Good time to stay light. And just tread lightly and be nimble as you head into the close of the month. Best of wishes for everyone. Have a great weekend. And I will see you next week. Cheers, guys.